Good afternoon and welcome to the Blue Line Metals Edge here for Thursday, August 11th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. If you're watching this on YouTube, please like and subscribe to our video channel and help us grow it. If you need any additional information, go to our website, www.bluelinefutures.com. I recommend that you take a free 2-week trial of the Morning Express and also look at a lot of the research reports that we have. They'll come to your email box every day before the market opens. This is one of the research reports that we are putting out. It's going to launch here this week, probably tomorrow. I'll include it in the Kitco article that I frequently write on Fridays. We'll give you a 2-week trial of it. It's something newer. We're trying to be a little bit more quantitative, a bit more macro, and focus and really hone in on the metals markets. So today here we had an economic data release. We had the PPI and core PPI. Those numbers here, they were softer than were anticipated. You can look at the graph here and you can look at like core PPI, for example. You can see that it's sloping downward. And as a result of that, we saw a bit of euphoria, a bit of an extension in the markets. We saw U.S. equities. They really started to rally on that news. We took off to the upside. And since then, I mean, it was really another panic short covering rally type of market. But as you can see, as this day is progressing on, we are rolling over on the S&P to the downside. This is a 15-minute chart coming down. We're starting to break down. The key news that I think really pulled the rug out from it is that Goldman Sachs, they said that we see gasoline above $5, Brent crude at $130 by the end of the year. That news coming out right there. Remember that's really inflationary. It's very hawkish for the Fed. So I believe that's why we started to roll over here back to the downside. Now looking at the gold market, some of these other markets, got a bit of an inside day going on. We tried to break out to the upside yesterday. We failed. We settled back. Really disappointing. You had the dollar down over 1%. You had treasury yields backing off as well. There's no reason why gold shouldn't be at 1850. So something bigger out there that's going on. And I think that the gold market really doesn't believe that the Fed is done tightening. That's what's going on. So if you look back at the report here, some new additions that we're putting on besides the long-term trading strategy, the trend following trading strategy, which will generate a long if we close above 1811.50, and it'll have a sell stop that'll probably be in the 1760s or low 1770s. As that market goes up, it'll trail that stop higher. So you can see yesterday we settled at 1813.70. We've got to close today above that 1811.50 in order to generate the long. However, if you are looking at buying some kind of correction, or if you miss some of these long opportunities, I'm going to issue some swing trade ideas here. Some things we're trading with inside ranges, more reactionary on the trading. So today would be a buy at 1793.30. Your sell point, if you filled on that, would be 1814.60. Now, some people might not elect to take the sell side of it because of the fact that if we closed up at 1814.60, we would trigger the long thing and you just bought on a dip. So looking at, we're also running an algorithm for probable trading ranges. Today's probable trading range on gold was 1822.60. Low end of the range is $1,800.30. We get into the gold market. Let's see how we're doing right here. We've got the upside of the market was 1815. Downside, we're right at 1802. So we're well in line with where today's probable trading range is. Now, I am putting out a small disclaimer below it that the models will provide additional levels for active risk management on economic volatility events or sudden changes in volatility. So if we start to see a big pickup on vol, especially in U.S. equities, in the gold market, and other outside markets, or news flare-ups like we're going to war with somebody else or somebody's invading somebody and volatility picks up, what we'll do is we'll run the next level of volatility bucket and you'll get some additional levels. So it'd be like 1837 and then like 1793 on the gold. That's what I was looking at here as far as today, looking at that next standard deviation out on risk. Pushing on to the silver market here. Yesterday it had started to form back up again. We had a bit of a breakout again on the silver market. But today we're backing and filling here. So let's go to the daily chart, look at it real quick. Same thing here on silver as far as the chart. Old support, new resistance. We're hugging this 50-day moving average. That should act as some degree level of support, but really what you want to see is this DMI plus widen out over minus. We are correcting a bit from an overbought territory on the stochastics, getting back into the thick of things. So the system's long, got long on the August 8th settlement, 2076. Market settled at 2080. I'm using a 1,000-ounce contract on this one to measure it out. So it's up $120. This 1955, that's where you could put your stop loss at for the long-term traders. Now, some swing trade ideas, if you do see the market pulling back or you do see it looks like it's going to set up for an inside day, a nice place to get long on silver would be $20.26. Sell point would be up at $20.78. Today's probable ranges here, upper boundary 2094, low end 2035. So let's see where we're at on that. Pulling up that daily, the upper end of the boundary was 2074.5, and the low end right now we're about 2035. So we're narrowing right in on this range. It's actually right on that bottom of it here. So I'll be interested to see if we bounce back from here, stay within the trading range, or if we're going to break down and maybe get some opportunities for a lower end buy point to accommodate some of these other positions up here. Looking at the copper market, coming right up to this key level, 371.20, also that 50-day moving average. We're seeing it widen out a bit. Stochastics are pushing into overbought territory, so it is strengthening this market, but I'd be a little bit leery and see if we don't consolidate in this area or if we get some kind of pullback. Now, I did see this story on Reuters that was talking about copper speculators anticipate a downturn for the market and the world. So you saw, click on this ad real quick. It said that the funds have been building up short positions in anticipation of a recession. So looking at the data on copper, we can go to the crowding analysis. Yeah, they're net short 17,000 contracts. We'll see if they add to the shorts tomorrow, if they've been adding this week to that, playing that downside move, or did they cover on the short side? It's going to be something interesting to watch. The probable range on copper, lower boundary 360.5, upper boundary 369. I believe we're right in line with that again here today. So you go to copper. I'm using a December contract from that. So 373 on the top end, and then the lower boundary 364.5. We are in that stochastics overbought. We'll see what happens right here. Getting into a couple other things. Oh, with copper, you always want to keep an eye on China COVID cases. They hit a 3-month high. They don't have a ton of cases out there, but it's definitely something you got to look at. I know you can highlight in on this thing and look at smaller time frames of it, but this is definitely a story I would keep an eye on here. And then again, you want to look at like when you start seeing like these big banks and they start ratcheting up, their levels on inflation, that's going to put the screws on the Fed and make them a bit hawkish. So you might start to see some of these PPI numbers come back up and things like that. That's definitely going to impact, the stock market and everything else. Getting back into it here, platinum, real nice move on platinum, extended up higher here today. This is kind of your key level of support. I'd like to get long some platinum on a pullback here. I know that the system is already long if you're following it. Got long at 924.90, stop loss 859.20, settled at 946. It's up $1,060. Risk management, trailing stop would be 915.60. So here's your probable range: 957 on the upside, 933 on the downside. Your swing trade idea is 921.80, and 946 is where, if you filled on that pullback there, that would be the first spot where you'd want to take something off. Looking at a couple other things here, you're definitely going to want to keep an eye on this, on the CME's Fed Watch tool. Again, prior to the release, we saw this jump back up. With that Goldman Sachs coming out with that higher numbers, I wouldn't be surprised if it didn't play some kind of impact on it. You see this come back up a touch, this come down a touch. And then the dollar index, it's continuing to break down today just a touch. I write another letter called the FX Rundown, and we saw that a lot of the foreign currencies shot up quite a great deal yesterday. We saw the dollar break down. So the FX Rundown, short dollar, long most foreign currencies. It's actually neutral on a few, but the commodity currencies that it's currently long. So that's going to be about it. Shorter day here today. Keep an eye on things. Start using some of these ranges on the report. If you want the report, shoot me an email. Otherwise, I'll have a sign up for it here this week. And then if you have any questions, futures option trading, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Good trading.